Everybody, so happy to have everyone here for our first webinar with Park and Associates hosting our Homeowners Association insurance responsibilities. The two presenting today, you see myself, Robbie Korth, and then we have Stacy Diana on the screen here as well. Stacy and I are super excited to bring this content to you guys. So the goal for those of you that are on the call and those that join us is you have one takeaway that can help you help the associations that you work with. And hopefully throughout this presentation, we're providing that value to you. So before we jump into the bulk of why we're here, I want to give everyone a brief overview on who I am, who Stacy is, and then who our company is. And then we'll jump right into the Homeowner Association insurance responsibilities. All right, so a little bit about me first. As I said, my name is Robbie Korth. I am a South Florida native. I found when I moved back here in 2018, I am one of the few left. I had spent probably about 10 years or so away from South Florida. In doing so, I received my corporate communications degree from Baylor University and played Division I tennis there as well. Outside of getting my degree from Baylor, you see some of my tennis accomplishments on there as well. The one I am most proud of is when we made the Final Four my senior year. We lost to the team who actually ended up winning the national championship, and it was on our home court. So that one still stings a little bit if you couldn't tell, but all in all, my time at Baylor was a great experience, and it allowed me to go and work for a company called USLI once I graduated. They are an A++ rated Berkshire Hathaway owned insurance carrier where I worked for about 4 years. My most relevant experience there is where I was the main point of contact for 300 insurance agencies, small to large, and I was able to see what I liked and what I didn't like and bring that experience back to Park and Associates and do what we do here today. As of this year, I've taken over as president of the company. I have my certified insurance counselor, my CIC designation since 2019. I am recently engaged, and my beautiful fiance and I have 2 dogs and 1 cat. Stacy, why don't you tell everyone just a little bit about yourself?
Thanks, Robbie. Hi, I am Stacy Diana. I've lived in South Florida since 1993. I relocated here from the Philadelphia area. I've had 26 years of insurance experience in the South Florida area, of which 15 have been with Park and Associates, focusing mostly on associations. I write about 150 plus associations in the South Florida area. I've had my CISR Elite designation since 2004. I'm the mother of 2 college students, one at UF and one at FAU. And I have a dog and a cat.
Awesome. Thanks, Stace. So now just give you guys a brief idea of who Park and Associates is, why we do what we do, and what makes us just a little bit different than other insurance agencies you might be familiar with. So Park and Associates is a family-run, boutique, independent insurance consulting firm that's been providing property and casualty insurance solutions in this area since 1975. Our focus today is on commercial property, association, and business insurance, and our team has a combined over 100 years experience, again, in this specific area doing property and casualty insurance. Our goal is to always offer coverage-centric insurance solutions, and we want to let our team of consultants get you the coverage that you need at a price that you can afford. We make 3 promises to each and every single one of our clients at Park and Associates. Those of you that we work with today will know how seriously we take each and every single one of these. And those that we don't work with, we're really excited to show you just how seriously we do take each and every one of these promises. The first one is that we respond to any inquiry that our office receives within 3 business hours. That does not mean we're always going to have an answer for you in that time, but you'll at least know that a real person hears your need and concern and is actively working on solving that for you. We also automatically market any renewal increase of 10% or more on your behalf. We're also continuously monitoring your insurance program to see if it doesn't hit that threshold, if we should be marketing it, to make sure you have the most competitive program available. And we also shop your account based off of your request as well. Last but not least, the one that I think is most unique to us at Park and Associates is we conduct a semi-annual review with every single one of our clients. Typically that's done via a short form questionnaire, where we can recognize any differences in exposure from what was happening at the beginning of your policy term through 6 months in, so we can address those as needed and not wait till renewal to do so. Up on the screen now, you'll see a picture of our team of consultants here. You see myself, Robbie Korth. You have Kara Park. She is now the vice president, former president of our company. Stacy Diana, who's on the call with us today. We have James Acarnisi and Joyce Blanchard. Those are 2 of our newer commercial insurance consultants who have been doing a great job for us. And then we also have Joanna Jendroska and Rosie Landisi. Those are two of our personal insurance consultants, and they're the ones who help you out with homeowners, renters, auto, flood, umbrella, whatever you might need from a personal insurance perspective. But without further ado, enough about our company and everything like that. We want to now jump into the heart of the presentation. So we're going to talk a little bit about what the difference in a homeowner association and a condo association is. We'll talk about the common types of setups for associations. We'll talk about property coverages for associations, talk about some endorsements, exclusions, and additional coverages. We'll talk about flood insurance and whose responsibility it is to carry that coverage. We'll give you some other coverages to consider, answer some frequently asked questions, and then open it up at the very end here for Q&A, where you guys can either type in throughout the presentation, or I think I gave you guys the ability to unmute yourself. You can just type, unmute yourself and talk into us as you need be. But without further ado, I'm going to pass it over to Stacy and let her take it from here.
Well, good morning, everybody. This morning, we're going to talk about homeowners association and condos associations. Now, the difference between the two would be the homeowners association follows Florida Statute 720, and the condo association follows Statute 718. And the best way to know which statute your association follows is to just ask. We're going to talk about now who covers what in the association. The association's bylaws for an HOA is the way to figure out what is covered by the owner and the association. Statute 720 does not state what needs to be covered by the association as far as the property coverage goes. So it would be listed in the documents either under the insurance section or the maintenance section. On a condo association, the statute dictates what the association covers and what the owners cover. Now we're going to dive into the two most common association types. There's an individual policy where the residents carry their own insurance and there's no master insurance policy, or there's a combination of a master policy covering portions of the commonly owned association property and the residents carry the coverage for what they're responsible for. There's pros and cons to each. For the individual policy, the advantages would be that the individual homeowner is in control of their own insurance program, and they don't have to rely on someone else to cover their most valuable asset. The concern of this would be that if one or more homeowner didn't purchase adequate insurance, it could jeopardize the curb appeal of the building. Whereas if you have a 3-unit townhome and there's a fire that destroys all 3 units, and the 2 end units have enough insurance to rebuild their units, but the middle unit is either uninsured or not insured to adequate value, it could jeopardize the curb appeal of the association, or the building rather, if the middle unit isn't able to be rebuilt. On the combination policy, an advantage would be that both the homeowner and the association are in control of the insurance. The property is definitely more broadly covered, and there's 2 potential sources of remedy if there's that unexpected claim. Another positive would be that you only have one adjuster handling the claim for the exterior of the building. So there's only one adjuster covering the roof, for instance. And like in our situation, there would be one covering that fire damage claim for the exterior. A concern would be that the homeowners could feel that in some items they could be double covering, but it's always our recommendation to have that extra cushion of coverage and know that you're going to have coverage if needed. The most common property form used for a homeowner would be a CP0010. Now, how would you tell which form is used? You would just have to ask. The form number is listed at the top of the form. Now here you'll see the front page of the form. You may not be able to see the form number because if you have your tiles to the right, it might be covering it, but the form number is listed right under where it says commercial property, and it will show the CP0010 with the addition date next to it. So the most common forms for property coverage are the CP0010, which is the building and personal property coverage form. And that's used by everybody except a condominium association, which uses form CP0017. If you're not a condo, you should not be using the condominium coverage form. There's some key coverages offered under the CP0010, which would be hurricane versus a wind hail deductible, a calendar year versus occurrence. Back in 2004, we had 2 storms 3 weeks apart. And some associations did have damage from both storms having the larger out-of-pocket deductible paid twice. After that, they came up with the idea of a calendar year deductible, where you'd pay that larger deductible only once during the hurricane season. The association's common areas and contents would have coverage, which would be your guardhouse, your clubhouse, your pool, your playground, and any other amenities that you may have insured. The association's habitational structures would have coverage if the association is responsible to insure them. The form is written on actual cash value. However, if you refer back to the deck page, that's where you'll see the replacement cost or agreed amount. And the roof and exterior of all the buildings also would have coverage. Additional coverages that you may want to consider would be ordinance or law. And everybody thinks of ordinance or law as, oh, my building's new, I don't need the coverage, I'm up to code. Well, ordinance or law covers a little more than that. Florida Building Code says that 50% of the building or 25% of the roof are damaged, the entire building or roof has to be rebuilt. Insurance covers only the damaged portion. Ordinance or law will cover the undamaged portion, demolition of the undamaged portion, and bringing it up to any code changes that may have happened since the building was built. Agreed value is something else to consider, which would be where you and the insurance company agree that this is the value of the home or the building at the time of a loss. You're agreeing to that value, and that's the maximum that you'll get paid. Now, some policies have co-insurance and some policies have no co-insurance. Co-insurance is written either at 80%, 90%, or 100%, meaning that at the time of that unexpected loss, you're attesting that the value you have insured is at least 80, 90, or 100, whichever your deck page shows, percent of the true value of the building, or you're going to suffer a penalty and they will penalize you by the amount you're underinsured. No co-insurance is always a better option because that penalty for being underinsured would not be there. We have a wind deductible, a hurricane deductible, or a named storm deductible. Now, a wind deductible is just that. Any wind or hail would have that higher deductible. A hurricane deductible is only in the event of a hurricane, and a named storm would only be in the event of a tropical storm or a hurricane, would you have the higher deductible. There's some exclusions and limitations on the property policy that you should be aware of which one would be fungus, wet rot, dry rot, and bacteria, which is known as mold. There is a limited amount of coverage added back onto the form with very limited perils. Communicable disease is also excluded on property policies, and most of us know that today as the COVID-19 exclusion, which there is no coverage for. Equipment breakdown can be added back onto your policy or bought separately. Equipment breakdown is would be damage to the property from power surges, electrical arcing, mechanical breakdown where you can't figure out what happened and it wasn't a wear and tear issue. Animals and vermin are also excluded. That would be termites, carpenter ants, rats, mice. There's no coverage under a property policy for those. Now we're going to switch over to talk about flood. Now, who would cover flood? In an HOA, the HOA is not eligible to purchase flood. FEMA guidelines say only the titled owner can purchase flood. The HOA is not the titled owner of the home, therefore the homeowner would have to purchase the flood coverage for the interior and exterior of the structure. There's some other coverages that you may want to consider for an association, which would be general liability, and we will be discussing that in our next webinar, which general liability also includes hired non-owned auto. I get a lot of associations saying to me, I don't have any autos, why do I need to have auto coverage? Hired non-owned auto would cover the association if a board member is driving for association business, going to the attorney, going to the management company, the insurance agent, and they get into an at-fault accident. In deposition, that may come out that what they were doing, and now they're going to sue the association as well as the driver. The driver's or board member's policy would cover them, and the association's policy would cover the association. Directors and officers is another important coverage because it covers any potential exposures the board members have, as well as covering employment practices liability, which would be any interaction that you have with the public. It has a retention versus a deductible, and the retention is just similar to a deductible, but it's paid up front by the association, and then the insurance company pays the remainder. Crime coverage is the only coverage required under Statute 720 for an association, and the association is required to carry the maximum amount of any funds that they'll have in any account, whether it be reserve, operating, all their accounts. Workers' compensation covers volunteer workers and uninsured subcontractors for the association. A lot of associations say we don't have employees. You may not, but the coverage is there for these people, and we've had examples of claims from both categories in our office. We had a president of a board want to get a branch off of a roof. He put the ladder up against the home, and the ladder slipped out from under him because there was some marshy stuff on the ground, and he fell and really severely injured his back. And the workers' comp policy covered all of his medical with no out-of-pocket to him. As for uninsured subcontractors, we had a subcontractor that was pressure cleaning the roofs in an association stop at a 7-Eleven and pick up a day laborer. Day laborers are never covered under an insurance policy for workers' comp. The day laborer claimed to have fallen off the roof and sustained injuries. Since the subcontractor wasn't covering him, statute says the next in line would be the association, and they had to pay for all of their legal costs and part of his medical out of pocket because they did not have this policy. Cyber liability is a relatively new coverage that's come about, and it covers when you have any personal identifiable information of others. You should have a policy. Personal identifiable information would be if you have their name in connection with their date of birth, their social security number, any banking information, anything like that that could personally identify them, you should have the policy. It also covers social engineering, which we all know is the phishing emails we get, or even if you're paying the landscaper this month and you get a call from them that says, please don't mail the payment to our normal address, we've moved, please mail it here. Then 3 weeks later, you get a call, we didn't receive your payment, and find out that that was totally fraudulent. That would fall under social engineering. Umbrella is another coverage that is important because it's additional coverage over the general liability, hired non-owned auto, and employer's liability of the workers' compensation, as well as the directors and officers.
Awesome. Thank you so much for all that great information, Stacy. Now, guys, we're going to pivot a little bit and jump into some frequently asked questions. We have 2 slides dedicated to this. The first slide you see up right now are questions we get most often from the association's perspective. The next slide will be questions we get most often from the homeowners or the people that live within and work within the association's perspective. So these were given to us before the presentation, and also things that Stacy, myself, and our team, questions that we're getting honestly on a weekly basis at this point. So the first question, the one we probably get the most this year, is why did our rates go up so much in 2020? Stacy, what are you telling our clients when you get that question?
Well, in 2020, there have been tremendous rate increases, especially on property. And what we've been told is that the reinsurers, who are the insurance companies for the insurance companies, have raised their rates because they've been paying on all the natural disasters around the world. And in turn, since the insurance companies' rates have gone up, they're passing it down to all of us, the consumers.
Yep, I well said, Stacey. The same thing I'm telling a lot of our clients, and I have a feeling this this next question probably leads into why rates are going up so much this year as well. But is COVID-19, how does that affect the insurance landscape, and is COVID-19 covered?
Most policies are, if they haven't already added it, they are adding it as they renew. They're adding a communicable disease exclusion, and I've even seen a pandemic exclusion. So COVID-19 is not covered under any policies, or it will not be going forward. We expect to see this continue on just like the terrorism has continued on since 9/11.
Exactly. Very well said, Stace. Now, what about this last one? This is one I probably get most often when talking to newer associations. Why do we need an appraisal every 3 years as a homeowners association?
There's no statutory requirement to a homeowners association ever getting an appraisal, but we recommend that they have one every 3 years. The condo statute requires an appraisal every 3 years, and that's part of the reason we also recommend it, because it keeps you to be sure that you're valued adequately. And if you do have that co-insurance on your policy, you would hate to get hit with that co-insurance penalty for being underinsured.
Exactly. Now, let's pivot a little bit to some questions we get from the homeowners perspective. So I live in a homeowners association. I own my own home in Boynton Beach. So Stacy, as an individual homeowner, do I need to have an HO3 or an HO6 insurance policy?
Well, an HO6 policy is a condo unit owner's policy. If you're not a condo unit owner, you shouldn't have an HO6.
Very well said. Okay, so my HO3 is good for my home. Perfect.
Yes,
What about this next one here? What does my association cover?
Since there's no statutory requirement for coverage for property on an HOA, the best way and mostly the only way to know what your association is covering is to review the association's documents. If you really don't want to review them, you could just send them over to us and we'd be more than happy to review them for you.
Perfect. And if I'm no longer on my association's board, will the D&O coverage still cover me if I'm named in a suit retroactively?
Most D&O policies for associations will cover past, present, and future board members. D&O is written on, each carrier has their own form. So the best thing to do is to review the form and be sure whether you have coverage as a past board member. And again, if you don't want to review the form, you could always send it over to us and we'd be more than happy to review it for you.
Perfect. Thank you so much, Stacy. All right, guys, we're going to go ahead now. That's kind of the bulk of all the coverage things that we had for you today. On the screen in front of you now, you'll see just some testimonials that we've received from our clients this year. The reason I wanted to put these up, or we wanted to put these up on the screen for you, is these are all things that we strive to achieve every day in our interactions with our clients. And when they reflect that back onto us, it just means the world. So we've went and highlighted the red parts. That's where I'd ask you to draw your attention to on the screen. So Leori G said, "We were truly responsive to her business's needs. We answered quickly and provided really great rates and really great service." Joseph A. was showing a significant increase and said, "Overall, switching to Park & Associates was a painless and efficient process." Paul C. said, "We give timely, efficient, and clear and easy to understand explanations." And my absolute favorite one is the bottom one from Wayne. He says, "Not only do we call you back right away, but we're efficient, knowledgeable, and professional in the way that we're interacting with our clients." So those are just some things we strive to hit. We wanted to put that up there because that's, like I said, it means the world when our clients reflect that back onto us. Now you'll see some dates and times starting tomorrow through the beginning of next week where we have specifically blocked off this time on our calendars for those of you on this call, whether it's for yourself or clients of yours that you would like for us to walk through a risk assessment. Okay, this is a great opportunity. I encourage you guys to take advantage of it. If we don't work with your association today, we'll do just what it says on the screen. Walk you through a 30-minute risk assessment to better understand your association's exposures, what you're looking to cover, what you're not looking to cover, what your exposures are, and then tailor a program that you can be confident in for you. If we do work with your association already, we'd encourage you to take this time to get on the phone with us, maybe ask some additional questions based off the presentation we have today, some other questions that you might be getting from the association. Or if we haven't walked you through a risk assessment in the last couple of years and you'd like us to do a fresh one for you, we'd love to take that time and do that for you as well. So take a look at the dates and times on the screens here. Please reach out to us. We would love to spend a little bit of time with you. And all the contact information for Stacy and myself will be at the end of this presentation so you can know how to do just that. But now I'm going to go ahead and unmute everybody. And if you guys have any questions based off of the presentation here, just feel free right now to unmute yourself, or if I've unmuted you, just this is your time right now. So what questions do you guys have for us? And if you can't unmute yourself, you can also use the chat function to type into us as well, guys. Looks like no questions are coming through, so we'll just kind of continue through the presentation. Like I said, if anything pops up, you guys can contact us at the very end, personally, and we're happy to communicate with you that way as well. So our next webinar, it will be on January 28th of next year. We're going to go even further into homeowner association insurance responsibilities. But as we said earlier in the presentation, this time we're going to dive into liability coverages. We'll spend a lot of time talking about general liability, go a little bit further on the hired and unowned auto. We'll talk about directors and officers coverage. We'll talk about employers liability, otherwise known as workers' compensation. We'll talk cyber liability, and then we're going to talk umbrella coverage as well. So keep an eye out for that invitation coming in the next few months here, but we ask you to mark that January 28th date off on your calendar, and we'll look forward to seeing you at our next webinar. Outside of that, thank you so much for jumping on with us today. Means the world that you spend about a half hour of your time learning a little bit more about homeowner association insurance responsibilities with us. You'll see all of the contact information for us right on the screen there. So we have our office number, our direct line for both myself and Stacy. You have both of our email addresses there. We've given you the link to our website. And I'd also encourage, if you don't already, go follow us on Facebook and LinkedIn. We are consistently updating content on those platforms on a weekly basis. And also go and check out our blog. The link to do so is right there. We're usually doing a blog once every week, typically on Fridays. And over the last several months, these blogs have been specifically tailored towards associations in the insurance responsibilities, needs, and concerns of everyone within those associations. So go check those out if you haven't already. Outside of that, thank you guys so much for spending some time with us here today. As we said at the beginning, our goal is that you can walk away with one piece of information that can help you help the associations that you work with, live within, or help manage. So thank you guys very much. We'll look forward to seeing you on January 28th.